anti-financial advisor. What does that exactly mean?
I mean, there's really no restrictions on how it can be used, the money that is in there, right?
That's right. That's the hardest part about it, is because you can use it for so many things. The government's really good at training us to be stupid. You have a 529 plan. You can only use it for college, nothing else. We slap you with penalties.
Yeah.
401k, only retirement, only after 59 and a half. You can use it before, slap with penalties, right? Like,
Yeah.
they're so good at telling us you can only do one thing with this. But with this life insurance, it really is like a savings account, but it's tax-free, protected from losses to creditors, and you can make, again, so much more money than you would with the bank. And that money, of course, can be used for so many different things that you can actually create more leverage with it. So it's really a great place to store cash and then use that cash to make more money.
Get ready for the next iteration of you on your path to becoming wealthy. On this show, you'll get the insider's view on wealth creation, the class none of us got taught in school, with my co-host, daughter, and beginning investor, Sophia Bosch. And now, let's get started. Welcome to the Becoming Wealthy podcast. I'm your host, Michelle, my co-host,
Sophia.
And Sophia, we have a guest today. Are you excited to meet him?
Of course.
Awesome. So the gentleman that we have today, he is, he calls himself the cash flow expert. He is also an anti-financial advisor. So he's not so excited about financial advisors in general. He's the leading authority teaching entrepreneurs and professionals how to get their money working for them, and not tomorrow, but today. He's an author. He's also a podcast host. His podcast is called Money Ripples. He's been also featured on CNN Money. He's been also part of Bigger Pockets, which I know you're familiar with. And he basically is excited to come and talk to you about, getting financial results. So with that, I would like to introduce you to Chris Miles. Chris, welcome to the show. How are you?
I'm fantastic. So happy to be here.
Excited to have you here as well. So I'm going to go ahead and kick it off to, to Sophia so that we can get started, with our conversation for today.
Yeah, okay. So when I was first reading the little bio, I came across the anti-financial advisor. What does that exactly mean? What do you mean by anti-financial advisor?
It means I chew them up and eat them for breakfast. That's what it means. No, I'm just kidding. No, what it does mean is it kind of goes back with my story a little bit. When I was growing up as a kid, my dad was, the kind of guy that was taught me to save everything, right? Save it all, be cheap. He would say frugal, but we all knew he was cheap, right? And, he would always say things like, hey, we can't afford this. What do you think I am, made of money? Money just grow on trees. And so naturally, as I went to college and I'm trying to find what to do with my career or my path, I realized I wanted to be a business owner. I realized that's where the best control of my time, my destiny, even financial prosperity would be from being a business owner. So I actually dropped out of college with one class to go. And I was trying to find something that would be like a business I could start. And maybe I'd go back to college later to get my MBA, just get real life business experience before I go to become a business consultant or something.
Yeah.
Well, the thing that I found, the business that I found that was kind of interesting was being a financial advisor, because I thought, worst case, at least I learned a little bit about money and investing, and then that helps me in life. And maybe I could even help my dad, because my dad would even say, he's like, Chris, this job will literally kill me. I'm going to die from the stress of my job. I was like, well, if I can give him some of his life back, that'd be worth it. So I did that for 4 years. And after 4 years, my dad then asked me, he said, Chris, when are you going to sit down with me and help me with my money? So for the first time in my entire life, I go back to Oregon. That's where I grew up. I go back to Oregon, I sit down with him, and I'm looking at all his finances, and he paid off all of his debt, including his house, in 18 years. He had stuffed money in his 401k and got the match and everything, like every good boy should, just like Dave Ramsey told me he should, we should, right?
Mm-hmm.
And then as I look at it all, I said, Dad, you're 61 years old. If you want to retire today, you're going to have to die in about 5 or 6 years, because that's when you're going to run out of money. Now, it wasn't because he didn't save enough. It wasn't because he wasn't someone who was trying to, that was blowing all of his money or whatever, or is deep in debt. He was doing everything right. And when he asked me, he said, Chris, what do I do? I said, I don't know. You did everything that I would teach all my clients as a financial advisor. You did it all right. It's just not enough.
Mm-hmm.
And he ended up having to work into his 70s before he was finally forced in retirement because of health reasons, right? And that set me on a journey. I was like, well, there's got to be an answer, because I kind of spoke with a friend of mine who left. He actually worked for me as a financial advisor. He left to go do real estate investing. And I thought he'd be broke. And I get the opposite response from him. He's like, man, my life's awesome. My dad and I have partnered on some real estate deals, and we've now doubled his income as a professor at the local university. I said, hold on a second. You just started doing this 5 months ago. That's too good to be true. My little financial advisor brain cannot fathom that you can make that much money and invest it.
Okay.
He's like, we're doing it. He's like, well, Chris, well, how many of your clients are financially free where they don't worry about money? Well, none. They all worry about money. Well, how about this, Chris? How many of you guys as financial advisors are financially free, not off the commissions from selling the stuff to them, but actually doing these investments? And this was like 2005, when I was having this conversation, so 20 years ago. And I said, well, there's guys been working in our office since the 1970s, and they can't retire either. So I'd say none. There's your problem.
Was there in a specific asset class, or was it more like of a strategy that he was applying?
He was doing more flipping
Okay.
at the time. However, when it got me to start looking into that stuff, eventually I quit being a financial advisor because I knew I couldn't teach it because I knew I was out of integrity if I kept teaching that stuff.
Yeah, absolutely.
But I started to learn I could lend my money to investors and things like that. Never even heard of what a hard money loan was. And then these guys at that time, of course, 2005, 2006, real estate was pretty hot. It was like 2021. So
Yeah.
these guys were paying like 2% a month, 3% a month, for borrow your money. I was like, holy cow, I'm doing the math. I'm like, I could actually retire. In fact, so could my dad, so could almost everybody could retire doing real estate investing instead of going in the mutual funds and hoping you don't lose your money again.
Yeah.
Which, by the way, a couple years later, it did. The market tanked again, right? So I ended up quitting, stopped being a financial advisor, started doing these things, and I was able to retire when I was 28 years old. And then I was wondering what to do with my life. And
You started
how did I
in
do
Sep-
it, right?
she's turning in September 18, so that means like 10 years afterwards, you could be in the position that he was when he was 28.
Oh, she'll beat me. I have a September birthday too. So yeah, I was 28, almost 29 years old. But yeah, I mean, you're way ahead of me, Sophia. Like that's the thing I wish I knew then because I wasted so many years, trying to do the financial advisor thing. And that's the thing, like, coming back to why I'm an anti-financial advisor, well, because I was trying to tell people to stop listening to the advice I was giving, right? When you really look at it, I mean, did you know that really out of like all Fidelity has like 45 million account holders in the United States. That's like more than 10% of the population. Did you know that only 2% have over $1 million?
Wow.
And of
I did
that,
not know that.
that 2%, 1/3 of them don't even think they'll even have a shot in hell to be able to retire. They think it will be impossible to be able to retire. So think about that. Like even 2%, you're like, yeah, you got a 2% success rate. Oh, but really only a third of that. So really it's like a 1% success rate. And that's like going to a restaurant that has one 5-star review because their mom went in, but the other 99 are like 1-star reviews. So you're like, why would I go to that restaurant? It sucks, right? Well, that's financial advising. That's what's happened. And here's the crazy thing: 80% of people are happy with their financial advisor, yet they change financial advisors every 3 to 5 years. So they're not happy. So which is it, right? And that's the problem. And that's why I realized I had to wake people up. That's why I created the company Money Ripples, right? It's that ripple effect that you create because as you actually have more money, you start to create more passive income now versus later. You actually start to generate that. Then what happens is that now you have options because with more cash flow comes more options. And with more options comes more freedom. And when you do that, now you stop worrying about your own problems and how to pay your own bills. Now you start to look around at how you can bless more lives around you. And that's where that ripple effect you can create in people's lives.
Now, can you perhaps for Sophia back up a bit? So when you say, I was financially free at age 28, what was your cash machine? Because you need some income statement wealth, some money in order to be able to start investing into something else that is producing, the cash flow, into an asset that will be producing the cash flow.
Right.
Maybe you can tell her a little bit about, I don't know, if the vehicle that you're investing right now is allowing you to both have a cash machine and continue to invest. Like, what do you do?
Yeah, that's a great question because I actually had to do it twice, right? Because I was able to retire the first time, but then 2008 happened, and then I went from millionaire to upside down millionaire. I went over $1 million in debt, was in the hole, had to dig out of that hole again, and then do it again in 2016. So I actually had to retire twice by the time I was 39. Um,
Wow.
So
I don't think you're alone, let me tell you.
what's that?
I don't think you're alone. There's probably quite a bit of people where that has happened. I know,
Oh,
when we have and host our own events, people walk up to me and they're like, Michelle, I was doing this and this and this, and I had this amount of net worth, and it's usually seven figures or multiple seven figures, and I completely lost it all.
Mhm.
So yeah.
Yeah, I really did it like 3 ways in the first time I did it around. The second time I did it, I had a lot more diversity in my income stream, so that's why I've now been I guess now it's been almost, 9 years since the second time, but the first time around, it was, 1, I had equity in the starter home I started, so I had a lot of equity in that, so I stripped out the equity, used that to invest. Also got a rental, right? So I converted the starter home into a rental, and I was able to strip the equity out. Then I was able to invest that money and lend it. And then the third thing I did, is I was able to, like, actually just an idea I got from one of my friends. He said, "Hey, do you like doing mortgages?" Because I was actually a mortgage broker still at that time. I'd quit being a financial advisor, but I kept my mortgage license. He's like, "Well, do you like doing mortgages?" I said, "No, not really. I hate paperwork. I just like teaching people." He says, "Well, why don't you find somebody who does like doing the paperwork?" So I went to my broker and I said, "Hey, who fits this description? Who's basically a nerd that I can trust?" It said, "Well, go to Clark because anybody named Clark will be a nerd, right?" So I went to Clark and I said, "Hey, if I just send you clients your way, will you pay me 50% of anything that closes?" He said, "Yes." And so I started doing that. And I would get a check for like 1,000 or 2,000 bucks a month, just by sending a few friends and family every so often. And so as a result, I did that. I was like, well, I can do that with other companies. So like even like a wholesale jeweler, because I had friends that were getting engaged. I was like, hey, if you go to this wholesale jeweler, you'll pay a third of the cost you'll pay at a normal jeweler. And so I got paid like a few bucks here or there. And then so between that, I had those income streams from that, from business.
So quite a bit
And
of
then I had an income stream from real estate.
Yeah.
I had like 4 or 5 grand a month coming in. I only needed 3,500 to live at that time.
That is fantastic, and that is the key thing, Sophia. That I would like for you. I don't know if you caught that, and that is the fact that most people, when they think about retirement, or they think a big pile of a big number, that involves a pile of money, and how big does my pile of money need to be in order for me to be able to retire? And what Chris is talking about is really having different little income streams, or not so little, and have and decide, okay, what is a lifestyle that, I don't know, maybe represents security. And security could be, okay, a roof over my head. How much does that cost me? How much does medical insurance cost me? How much does my car cost me? How much, etc. And how much do I need to have the bare minimum, a specific month, to cover all my necessary expenses, that are, whether fixed or variable, that you really, really need, not that you want, but that you really, really need. And then figure out, okay, how can I create equal cash flow as the cash flow that is going out? How can I have that incoming through different little buckets, of possibilities? For him, it was, the jewelry business, lending out money. It was flipping houses, his rental. And then I think you mentioned a fourth or a fifth one. I can't remember
No, that was
which
it.
one.
Just those 3.
Yeah, yeah. And so do you start to see a little bit the connection there? Yeah. And so okay, so then you did this, and you're now 9 years later. What was that last, I would say, big aha that happened 9 years ago, that you started doing, that got you to the point that you are right now?
Yeah, I mean, 9 years ago, I started working on trying to, well, really, was it 2009, 2010, I started to dig out of that debt hole, right?
Yeah.
And then by the end of 2016, I was finally able to get to that next rat race that I got out of, which was like over 10,000 a month, because now I have 8 kids. So, a lot more to deal with than back
Eight
when.
children, ranges of ages?
Yeah. Now, to be fair, I didn't birth all of them. Okay, let's be honest. I didn't birth any of them, right? I don't have big babies that way, but 6 of them are mine, and then 2 are my wife's from her previous marriage. So it's a blended family, like the Brady Bunch. Um, but yeah, they're between 9 and 21 years old.
That's amazing.
My
Super
this
dad.
daughter's about to turn 19 years old. She's a freshman in college right now, and trying to teach her this stuff. I'll tell you, Sophia, like you're probably already leaps and bounds ahead of her because, I just barely got her to figure out what a student loan was. Yeah, so
Yeah.
how to get grants and stuff. So that's the cool thing is that I've tried to get her into that world, but it's a little bit tough. Like it's not the stuff that's normally taught on TikTok or Instagram or
Yeah.
whatever stuff that she
Or
wants.
in the
So,
school.
talking about that, Sophia, this fall, she's going to start the application process for colleges. And for any, person that is her age listening to us right now, or even the parents, what are some actionable strategies that you taught your daughter when it came to either creating value or managing her money or how to pay, for school that in a way that basically went with your financial philosophy?
It's kind of interesting because I literally just saw a Facebook memory posting about my daughter when she was like 8 years old,
Uh-huh.
and she was actually kind of ticked off at me. So
Uh-huh.
what had happened is like I paid her, well, basically she saw that I paid her brother. Now she was the kind of girl, like she's the go getter in the family, right? Like
Uh-huh.
the older brother kind of does stuff, but not as much. Like she was the one that would take care of him, the older brother, and the younger brother and kids and things like that. She was like the babysitter at 10 years old and doing all those kind of things. We would ask her to do dishes. We'd ask her to clean 'cause she was the responsible one.
Yeah.
And she saw that I paid her younger brother a quarter for a chore. She's like, "That's not fair. Why does he get a quarter? Like, why do I do more work and I get paid less?"
Uh-huh.
Hopefully this doesn't hit too close to home, but 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 anyways, like, but she was complaining about that, and I said, "Well, how do you know you're not getting paid more?" And she's like, "Well, I don't." Like, yeah, like, why do I keep asking you to do these jobs? Why do we have you do the harder jobs than your younger brother? I don't know, because we trust you. And guess what? When we trust somebody, guess what? We will pay you more.
Yeah.
So you get paid more because we trust you. We do trust you with the harder jobs because we know you'll get it done. It's kind of like in business, like you're the A player versus the B or C players. You're like, boy, if you weren't related to me, you'd be fired right now, right?
Yeah.
And so that's one thing that I've seen carry into her adulthood now is that now when she goes gets jobs, it blows my mind because when I was in my 20s, she now earns more than I did when I was in my 20s, 20 years ago or so. But like she does, like she goes that extra mile, right? She does try to create value. And that's one thing I always teach everybody, right? Even my kids is that dollars follow the value you create for other people. The more you serve people, solve problems for them, or really just add value in a way that they want that value in their lives, they will pay for it. So stop asking, how do I make more money? Instead, start asking, how do I create more value for more people? And what you'll find is when you keep giving people what they want, you'll never want yourself.
Yeah, I
That
love
was a
that.
big lesson.
Yeah, that is a fantastic lesson, especially when it comes to trust, because there is inherent risk in anything and in everything, and in bringing someone on board. But when you trust that that person aligns with your values, when you trust in that person's capabilities and skill sets, when you trust in that person's adaptability to change as well, they will come into your organization or into your team and create tremendous amounts of value that is that really turns into money, into actual dollars. So I like this lesson. So thank you so much for sharing that, Chris. Now,
Second lesson I got was
Yeah,
just
go ahead.
just last month for her.
Uh-huh.
The second, because you asked about college, right?
Yeah.
And the hard thing is, especially when you have split families, like we have, divorce in our family and stuff, like her mom's very traditional when it comes to money and don't go into debt. She's like Dave Ramsey, basically, right? So like my enemy, so we got her over there and then you got me, two very different opinions. Well, she was kind of bummed because she came to me. She's like, well, Dad, I don't have enough money for college because I'm trying to bootstrap it. And we're trying not to really help her out. We're trying to let her figure out her problems and solve problems.
Yeah.
So I said, listen, once you've exhausted all things, I'll probably come in and help out, but I want you to exhaust it. And she was really stuck on that. Like, she's like, well, but they won't do it. I tried getting, scholarships. I tried getting grants. I only got a little bit of scholarship, but it wasn't enough. Yada, yada, all this stuff going on. Right. And I said, Well, have you talked to the financial aid office? No, I haven't really done that. And it's like, let's set up an appointment to talk to the financial aid office. Well, they already told me no. I'm like, let's set up a meeting with a financial aid counselor. And so I had to sit there with her right next to her. She went on the computer, we booked the time on the calendar. I mean, so easy. It was even during the Christmas break, right? Booked a time for like New Year's Day or the day after New Year's, I think it was. We talked to the counselor, and it was a 10-minute conversation, and she said, "Oh yeah, you never finished submitting online the application. You would have options." And I remember in her mind, because she went to that scarcity mode, she's like, "Oh, I don't have any options. It's hopeless." I'm like, "Well, let's ask. What's the harm in asking, right?"
Yeah.
And so we did. And so she filled it out. And I kid you not, 2 days later, we're driving the car and we're like, "Hey, so you think you'll get, some good news?" She's like, "Probably not. You probably won't get anything." 2 minutes after she said that, she's like, "Oh, I got an email from the school." The school gives her an email and they approved her for exactly the amount that she would need to come out of pocket for her schooling. It's like she could come zero out of pocket, and they're going to pay her for last semester because she never actually got last semester. So they're paying her extra above and beyond to essentially pay her back for the money she had paid out of her pocket.
That is
And I was like, look at that lesson. Like, you just had to ask. Like, you can't just assume, like, try. It doesn't hurt to ask. What's the worst you get? The same answer you already had, which is no, right?
Yeah, absolutely.
I fully agree with that. I've learned that easy way, hard way. Oh, like, well, there's only like one way, but if you don't ask, it's always a no.
Yeah, absolutely. It's always a little. Yeah. Another thing that I wanted you to talk to Sophia a little bit about was infinity banking.
Mm.
You are, I mean, a big proponent of that. Can you explain to her what that is? What is it? And how could, like, an example of how you can use it?
Yeah, for the most part, ignore most of the things you find online about infinite banking, right? I actually first heard about it. I never heard about it at all. The 4 years as a financial advisor, it wasn't until I went to real estate that I heard guys talk about this infinite banking concept, right? Or
Yeah.
IBC. And they refer me to this Nelson Nash book called Become Your Own Banker and stuff. And I was like, okay, I'll read it. Read it. The thing that shocked me is they were using a whole life insurance policy. So that's different than like term insurance, which is just death insurance, for your life. This thing is like, it's like you got the death benefit, you got that insurance part, but they also have this tax-free high yield savings account inside of it, right? And if you watch Dave Ramsey, he'll rip on it all day long because for the most part, they do suck. If you buy the traditional policies, they're really bad. Um, but what I learned, and especially after I bought my first one, I bought the crappy one because everybody told me, buy it from this guy. Well, the guy, long story short, he sold it to me. It was very expensive. When the recession hit, I couldn't afford to pay the premiums. And so I lost,
Okay.
I paid 25 grand into it and lost everything. And
Darn. Yeah.
I found out though, when I asked him, I said, "Hey, could we do something to make this better, to make it less expensive?" He told me at the time, no. Even though I had an insurance license, he said no. Well, after that happened, I decided to do my own research because I still have the insurance license. And I found out he was wrong. What was worse, though, is when I confronted him about it and showed him the numbers, and he tried to make all these excuses about why he shouldn't do it the way I wanted to do it, because I'm looking from an investor standpoint.
Yeah.
He finally just told me, like, after I knocked down all of his objections, he finally just said, "Chris, I did it that way because I can't afford to cut my commissions." And I said, "There's the truth. There's the answer." So, needless to say, I was pretty pissed off at him. But in the last, really, now it's been almost, what's it been? Like 17 years, give or take, that I've been perfecting on this. I found out you can actually make it less about the life insurance piece of it and more about this tax-free savings account. And here's the cool thing about it, right? Is that it's kind of like having a high yield savings account. You know how like Capital One has a high yield savings account? You might make 3.5% nowadays, from the bank. But then remember, even though you get paid from those bank savings accounts, you still have to pay taxes on that money. So even if I make 3.5%, I'm going to have to pay taxes on that 3.5%. My own local bank pays me 0.1%. I have to pay taxes on that piece of crap. So I walk away with like nothing. So I lose to inflation and everything else. But I remember my wife said, she's like, "Chris, I want to have money like set aside that we don't touch, right? Like money that we don't use for our emergency fund. But I'm not trusting the banks lately. Like the banks don't seem that great anymore. Who's to say they don't go out of business? Because they always seem to before every recession, right? And so I said, well, why not we earmark some of that money in this instead? Why don't we have more of that money inside of our life insurance? Because I'm earning right now 6% a year tax free on that money.
That's
And
amazing.
even after you take out the insurance costs, I still net at least 5% a year tax free. So that means to get the same thing on a normal savings account, I have to make like 7 or 8% when you factor in those taxes, right? Which you just won't find. And so it's a great place to store money. By the way, that money does not count against you for college. So you know how when you're trying to fill out college applications for financial aid, they ask you, what do you have? If you have a college savings account, like a 529 plan? If so, no money for you, right? That kind of thing. Or you got too much assets, your parents make too much money. Sorry, we won't give you that money. Here, you can literally store millions of dollars and they won't count it against you. But if I try to get a mortgage or I try to get a car loan and they say, hey, we want to see how much you have in savings, I'll send them a statement of what I have in there and they'll count it as an asset. So it doesn't count as an asset when you don't want it to, but it does count it as an asset when you do. And in most states, even if you get sued and somebody wins, I don't know if you knew this, but people can actually drain your savings account. Like they could put a judgment against you and that they can pull the money out of your savings account. They could pull out of your IRAs. You can pull out of almost everything you have except this life insurance policy. So I could literally store millions of dollars in there. It won't count against me for college finances. It does count for me when I'm trying to get loans because banks think it looks sexy. But it doesn't count against me if I ever get sued. So I get to protect that money. And even more importantly, well, I wouldn't say it's more importantly, that's pretty cool that, in and of itself. I know we have friends like Jimmy Vreeland that uses this a lot. He's got millions stored in there. I was on the Ryan Pineda show talking about this. And when I mentioned that lawsuits and creditors can't get to it, he's like, I've had 5 guests talk about that. Nobody ever mentioned that before. He's like, for that reason alone, I would get it. Right. But here's the biggest thing that's kind of cool that you do hear about this infinite banking thing is that you can actually get a line of credit against it, whether it be from a bank or from the insurance company directly. And if you get a loan from the insurance company because they know your money's in there as collateral, they'll give you a loan for almost all the cash you have in here. They'll give you a line of credit for it at a lower interest rate. And there's no minimum monthly payment. You pay it back however, whenever you want. They do charge you interest. It's like 5 or 6% right now.
Okay.
But you can use that money for whatever you want, including investing. You can use it in business. Then you write off the interest anyways. You can use that money. And essentially, because if you could take the returns, let's say you do some raw land type investing with that, right? And you take the cash flow from the raw land from doing that to pay down that line of credit. What happens is that you get charged less and less in interest. But remember, you never pulled your cash out of that savings account. So it's still in there growing, compounding interest and tax free. So what happens is you make money in 2 places at the same time. You make money with the raw land and you make money net interest above and beyond what you're paying them in interest. So you actually make money in 2 places at once.
Yeah.
Wait, I have a question. Wait,
Go ahead.
Great. If this is if this is so amazing, why aren't more people doing this?
Well, did you hear about it before like this?
Not like this.
Well, that's why. Because most of the time, well, one, most insurance agents don't even understand it really. Just like I didn't as a financial advisor, right? I didn't know anything about it. And even the few people that have heard of it, they hear bad things online because most of the time when people talk about it, they make it really expensive. I won't out this guy, but he's pretty popular on social media. He talks about it a lot. But the group that he uses will charge double the commissions, double the fees of those insurance costs coming out from your money. So remember, that was the thing that I hated too, because I was sending that money. It was all going to pay for the commissions, not back to me in that tax-free savings account. It was going to pay for the life insurance instead. So many of these guys, because that's the career, they make it a little bit more expensive. Even if they do it better than the guy I bought it from originally, they don't always do great. They just do good enough. And so you're kind of get money in there. And so most of us as investors will look at it and say, yeah, why pay all this money for all these costs? I can just go invest it right now and make more money, right?
Yeah.
That's been always the number one reason. But what I learned is that if I can minimize those costs as low as I can, cut them like by 80%, like literally like, somebody can actually have it for 80% less in costs than what they're normally paying for those kind of policies. And then I can use most of that cash to make money with it too, or keep it as cash reserves or whatever I want to do with it. When people realize you can use it more like from an investor perspective, it's actually a no-brainer. And in fact, it's interesting. I actually know people that own banks that refuse to put money in their own banks. They'll put their money in this instead because they know not only can they use it, but they can leverage it to make a lot more money. And so they're like, no, I'm keeping my money here because it's safer and I can get more leverage out of it too. So that's the thing, is that usually it's the wealthy people have understood how to use it. Even Walt Disney started Disneyland using the money from his life insurance. But again, not many people teach that.
Yeah, absolutely. Not very many people. Now, you did mention something. So basically, say you have $100,000, just as a hypothetical example, and you wanted to borrow against that. So you're able to borrow against it in the form of a line of credit, but
Mhm.
are you borrowing from, you're essentially borrowing from yourself. So you can basically be your own lender. Is that how that works? And therefore be able to, take the money out, use it for whatever it is that you need it in as a loan, and then
Mhm.
be paying yourself interest for the
That
loan that
and
you.
that's where there's the confusion. That's what online, because you don't actually pay yourself interest.
Okay.
That's the thing. So that's where, and that's why a lot of people get mad, because they're like, "Well, you lied to me. You said I paid interest, but I'm paying interest to the insurance company," which is
Yeah.
true. But remember, so it's a half truth, right? Like, you're half right there, Michelle, because
Yeah.
remember, like, you're paying interest to the insurance company from borrowing that money.
Yeah.
But and let's just say that you had 100,000, like you said in there, and you want to borrow 50,000 from the insurance company, and they'll give that to you. They don't even ask why you get the money. They don't run your credit. There's no credit check. They don't care. Well, that $50,000, you are paying interest back to them whenever you pay it back. But remember, the 100,000 still in there, earning the tax-free interest from them too. So yes, the insurance company is paying you for having the money that's already in that account, all of it that's in there. Because if you normally just pulled out $50,000, you're not making interest on that 50,000 anymore, right? Just the 50 that's left, not the full 100,000. Here, the full 100,000 is paying you interest while you're just paying interest on that 50,000.
On the 50,000.
So
Yeah.
that's the difference. So you pay them interest, but you just don't have to make minimum monthly payments. But if you don't pay towards their interest, it will compound against you. And so it's like a race of the compound interest between the two. It does kind of wash itself out. But what I just tell people is, if you actually use the money, like the cash flow you're earning from an investment, or maybe you did a business venture and like the cash flow that's coming from the business, using that to start paying back towards that line of credit, now you start to get charged less and less in interest, and you make more and more over here with your money.
So you could take basically some of your savings, Sophia, and open such a life insurance policy, borrow from it to go and, for marketing, for new deals, close some deals. And then the profits from those deals, of course, some of it goes towards paying off, that loan. But this is another way that you could continue to fuel your business, your little land business. So that's exciting. Now, are there any age restrictions? Like, could Sophia open one up, on her own? Or, I mean, she's 17. Does she still need, because I'm assuming she's considered a minor. She would need her parents to help her open. Like,
Mhm.
when can you buy such a, um, product, or, insurance product, in order to start making use of it and getting the benefits of it?
Yeah, once you get to your adult years, just like 19, 20 or whatever, you can actually buy your own and own your own policy.
Yeah.
In the meantime, when you're a minor, anytime, if any child's over the age of 14 days old, the parent can actually get a policy on the child and own it. But let's role play there. Like, let's say, Michelle, like you say, well, I want to just get this started now. Like, there's a guy on my team that's his dad did. His dad, by the way, speaking of Super Bowl that happened recently, his dad was the guy that created the website for the Super Bowl coin toss, like for the coins. And so he has like these memorabilia coins on his wall from the Super Bowls and stuff. So his dad was like a big entrepreneur. He learned about it when the guy that's on my team was like 17, 18 years old, basically the same age as Sophia. And he was like a stock trader and everything. He's like, I want to set this up on you. And he didn't even do a good job. He just did a basic one, right? But he did that. And then eventually, when his son became an adult, it was totally his decision, because the parents have full control of it. Even after they turn 18, you still have full control for the rest of your own life if you want to. But down the road, when his son was about 21 years old or so, his dad turned over ownership to his son. And he said, hey, I've been putting money in. You can use them to help pay for college. Well, his son said, yeah, I could. But you know what? I can just get these interest deferred student loans in the meantime. So why don't I just get the free money from the government in the meantime while I'm going to college? And then when I'm done, maybe I'll use that money to pay off my college. So he did. So the money's growing interest while the government's not charging him any interest on his student loans, right? Well, then he gets out of college and he says, nah, I changed my mind. I'm not going to use it to pay off school. I'm going to use it to launch a business. And so he goes to use it to launch a business to make more money there. And then eventually, slowly paid off those cheap student loans that he had, right? And so the cool thing is you can use it for whatever you want, right? It's just a matter of, what's obviously best to use it for. I don't recommend blowing it in Vegas. That's a bad use of that money. But you could use it for Vegas. You literally can use it for anything you want. The thing I do like, especially like this compared to like trying to get like those retirement plans, because there's retirement plans like IRAs and 401ks. The one problem is that you have to wait till you're 59 and a half, right? Years old. But for you, Sophia, I mean, you're like waiting what, 40 years? You use that money? 40 plus years, actually more than that, right? Like 40, 42 years now. So, and that's if they don't change the age in the meantime, because they've changed the age before. What if they make it 65 and then you have to wait even longer to use that money, right? So that kind of sucks,
Yeah.
Where the life insurance, there is no age restriction. It doesn't matter. And by the way, you don't have the restriction like, like there's the Roth IRA, which I know a lot of parents will set up for their kids, and that's cool. I think it can do some cool things. But again, 59 and a half rule, right? You have to wait till you're 59 and a half before you can touch it, or you get penalties and stuff. Well, that's fine, all, but what if your parents make too much money? Like if I make too much money, which I do, they won't let me do a Roth IRA. You have to do sneaky little things called backdoor Roths and all that kind of stuff. Or I can just set up my life insurance and I can put in up to 25% of my stated gross income every year. So like I had a guy that was a real estate syndicator. He did a lot of multifamily stuff. He's like, hey, my tax return shows me only making 25,000 a year because my real estate lets me write on everything.
Yeah.
But I made $1 million. I said, cool. Well, we can do basically stated income. We can just state that you make $1 million. They'll let you put in $250,000 a year into this thing. And they don't care if you make too much money, because actually the more money you make, the better. You can put more away. And so he did, so it's kind of cool. So you are restricted. You can't put in like, if you make 10,000 a year, you can't put in 20,000. They're going to say, you can't afford this. How can you do that? If you try to put away half your money, they won't want you to do that. But they do allow you to do that. So they just have all the stupid rules, penalties and stuff that you run across. And like me, if you want to retire younger, this is a great way to store cash and use that to invest. And if I invest in things that do have tax benefits, like many kinds of real estate, right, or business, of course, I get to keep all the tax benefits of that.
Yeah.
If I try to use those 401ks and IRAs, guess what? I lose the tax benefits, don't I? I get to keep all the tax breaks that we get as real estate investors or as business owners. I have to keep it by using this money instead. And like I said, if I use this, even if I borrow the money from the insurance company to go do some stuff like put in my business, any of the interest that I do have to pay them, I write off my taxes anyways.
Yeah.
So it's kind of like a triple dip. I don't just make money in two places at once, but then I get a reduction on the interest I do pay,
Yeah. And Sophia, I think I remember when I first heard this concept, I was like, infinite banking, does that mean that I can borrow against this like infinitely? And I think it really is just, that is alluding to that you can use it in so many, for so many different things. He just talked about opening, his business, maybe paying student loans, maybe. I mean, there's really no restrictions on how it can be used, the money that is in there, right?
That's right. That's the hardest part about it, is because you can use it for so many things. The government's really good at training us to be stupid. Like you have a 529 plan. You can only use it for college, nothing else. We slap you with penalties.
Yeah.
401k, only retirement, only after 59 and a half. If you use it before, slap with penalties, right? Like they're so good at telling us you can only do one thing with this. But with this life insurance, it really is like a savings account, but it's tax-free, protected from losses to creditors. And you can make, again, so much more money than you would with the bank. And that money, of course, can be used for so many different things that you can actually create more leverage with it. So it's really a great place to store cash and then use that cash to make more money.
Yeah, absolutely. Makes complete sense. Well, it's making you, at least 6%, which is not what a bank would be giving you on a savings account. Now, Now, what are you excited about for 2025? Tell me a little bit about what's exciting for this new year for you on your side of the world.
I mean, there's a lot of things I'm excited about. I mean, I'd say the primary thing I'm excited about personally is just the fact that, the great thing about entrepreneurship is it really is like a personal development course, isn't it? Like when you
Oh,
start to
yeah.
learn like these things, like you have to become a better person.
Sophia
And
can tell you about becoming a better communicator, talking to sellers. What did you have to do in order to be able to?
I had to well, it wasn't like exactly cold calling, but it was pretty much there. They'd only really received like a letter from me. Didn't really know who they were. I had to call up sellers after I'd given them, granted it was a low price for their property, but many of them were a little upset with me. So I had to somehow turn it around. It was
But did you
Yeah.
grow from that experience? It's
Yeah.
constant personal development, entrepreneurship. Yeah, so I
uh,
agree with you.
you're making me jealous because with all my kids, I got a bunch of teenagers and we can't even get them to call their friends for a play date. I mean, come on. We can't even get them to text their friends for a play date half the time. You're calling complete strangers out of the blue. Like most of them would freeze up and play let themselves.
Well, she didn't want to do it,
I
Chris.
didn't want to. I mean, no one wants like wants to,
Nobody
but you
wants.
have to.
Yeah, absolutely. Yeah, so we interrupted you, so please keep going.
No, no, I think that's amazing because I mean, that's the thing about entrepreneurship, right? It's that personal development
Yeah.
aspect. I mean, I remember my very first book when I decided to become a financial advisor, right? Was the first one they recommend was How to Win Friends and Influence People. They said, you got to read that book. And then you got to read, of course, Rich Dad, Poor Dad. Even though Rich Dad, Poor Dad tells us that financial advisors suck, but they didn't want you to read that part. And then I read like, what is it? Not Master Key to Riches, the one before it. Think and Grow Rich, right? So all the basic, like, really the personal development stuff, Seven Habits of Highly Effective People by Stephen Covey, all these books. And like now, like I'm digging more into like leadership, right? Like how do I grow as a person? And it even helps me with my family too. It helps me become a better dad, better husband. And so that's what I'm excited about in 2025 is that I've had a lot of breakthroughs. I did like hypnotherapy with our friends, if you know Brad and Yvonne, those guys.
I know Brad, yes.
Yeah, yeah. Brad actually been in real estate space and then went and became the happy coach, right? With all that. So like I did that in 2024. I actually brought him on my podcast. So that was my best investment of 2024. And that's including my raw land business, which pays really nicely right now. But I was like, but still the dividends I get from that personal development, you just can't take that away. It's so huge and it pays so many dividends in so many areas of life.
Wow, you're doing so many things. So you are doing a little bit of raw land. Like, are you wholesaling or doing more entitlement kind of work with the land?
I'm lazier than that. No, I like to be passive. I realize I don't like to flip properties. I'm not a good wholesaler. I'm the horrible property manager. So if I do have, so I here's my portfolio. I have like some rentals still left that I have other property managers manage. So turnkey rentals, right?
Uh huh.
I have them in different parts of the country because Utah sucks for rentals right now, or anywhere in the western half of the United States sucks that way. I do have like some money in some syndications, some lending deals and whatnot. Oil and gas, I guess some money
Yeah.
in oil and gas.
Yeah.
But the one that's paying me the most right now is a business partnership I have with somebody who is trained to do raw land investing. I said, hey, I'll finance it all. Like I'll pay for everything. You just make me money.
Yeah.
So I'm 70% partner, they're 30%, and they do all the work and we make a killing. Like I probably have about a 500,000 I've invested with them so far, and it's now kicking off over 13,000 a month.
That is fantastic. Yes, monthly payments. Sophia's
Yeah,
trying to build up her little cash flow. She's got $514 coming in her way every single month. So it's the beginning.
I love it.
It's the beginning for sure. Now, Chris, if for anyone listening, one final piece of advice, whether it's a person starting out or already someone with a little bit of more money, what would your advice be for them?
I would say this is to bring it full circle to what we're talking about in the beginning, right? About getting financial advice and everything else. Only get advice from people that have been there, they've done it, and they're still doing it today. That's my probably like my best mentor advice because if you're looking for financial advice, it's just like the question my friend asked me who got into real estate, right? He's like, well, how many of you guys as financial advisors are financially free, not from the commissions you're earning, whether people make money or not, but actually doing these investments? And I couldn't find one. I mean, even guys that were like multimillionaires still couldn't retire because they didn't have enough, in those retirement accounts to really make it worthwhile.
Yeah.
Where once I started to realize, like, no, it's about the income. It's the cash flow, the passive income that you earn. It's not about how much you store and sock away like a squirrel waiting for winter, right?
Yeah.
Like it's not like that. It's really about how do you get your money working harder for you? And the best thing to do is find advice people have actually done it.
Yeah.
And that's why I'd like do my podcast, the Money Ripples podcast and stuff, right? Because I like to bring on people like you guys to like say, hey, you've done this. It's like tell our people like, what are you actually doing right now that works?
Yeah. Well, that's definitely a great piece of advice. You want to learn from somebody that is eating their own cooking.
Honestly, yeah, it might seem very obvious, but I like is
Yeah, especially with there's an incredible distrust out there, in the general public, with the advent of AI, with just in general, uh, people not doing what they claim to be doing, and so on and so forth. So this is
true.
this
Didn't
is
think about that.
yeah, so important. If anyone is interested in learning more about infinite banking and, connecting with you, I know we talked about Money Ripples podcast, but where else can they connect with you?
Yeah, moneyripples.com, plus all of our social media handles are pretty much at Money Ripples. If you look up Money Ripples, you'll find us on Instagram, TikTok, Facebook, LinkedIn, all that stuff.
Awesome. Well, thank you so much, Chris, for being here with us. I appreciate you so very much for pouring into Sophia and into our audience. And for everyone listening at home, thank you so much for joining us on another episode of the Becoming Wealthy podcast. Looking forward to coming into your world on, the next show. And make sure that you give us a 5-star rating. Share the show with an important woman in your life. And looking forward to being with you guys on the next episode. Thank you so much, Chris.